Alrighty. Are we ready? All right, good. So we're wrapping up the day here. My name is Dean Takahashi. I'm the lead writer for GamesBeat at VentureBeat. And I'm a tech writer and a video game writer. Been covering the games industry for about 22 years. I also run our conference, the GamesBeat Summit, which is coming up April 23rd and 24th in Los Angeles. I think I've been covering VR in this go-round since running into Palmer Luckey at a table at one of the trade shows early on. So it's been a long road the last 5 years or so. And I'm going to have our panelists introduce themselves, starting with Stephen.
I'm Stephen Saltzman. First got into VR when I was with Intel Capital, became managing director for VR, gaming, and location-based entertainment investments in Intel Capital. And starting in January, became founder and principal and sole employee of Saltzman Strategies and Alliances, which is a consulting firm.
Hi, I'm Yasushi from the JFR Fund. We started to investing to the VR AR industry 3 years ago. 3 years ago, invested 3 years ago, and we total invested to the 22, 23 VR AR related startups. We are still very actively exploring the VR AR industry. But overall, we are a consumer entertainment focused fund, so we also investing to the esports or digital media sector as well.
Hi, I'm Angelo Del Priore, a partner at HP Tech Ventures. We're a corporate VC for HP, PCs, printers, 3Ds. I focus on AR, VR, gaming, and education spaces, and our last investment in this space was Mojo Vision.
I'm Amy Lemire. I've been in the spatial computing space for 3 years, first as an angel investor, now as managing partner of WXR Fund. We invest in female founders that are in the spatial computing and AI space.
Cool. Do you guys want to talk about some of the more interesting investments you've gotten into as well? And anybody can jump in anywhere here.
Sure.
Yeah.
One of the ones that's somewhat potentially relevant to this space is Tribe XR. I don't know if you guys have tried that, but it's learn how to DJ in virtual reality. So you're actually on Pioneer equipment in VR, and they've put people in the experience and then pulled them out and put them on real hardware, and they can actually DJ. So highly recommend trying that. They're going to do other learning experiences as well, but they started with DJing.
So my last VR investment for Intel was SoReal. So Sam Wong's been on a few of the panels in this conference, which after spending 2 years analyzing location-based VR, I thought was not only the most exciting approach to what it's doing, but the smartest business model. But that is kind of showing the power of the founders because of their position in the Chinese entertainment industry, where they can get other people to build out their experiences for them.
So as a corporate, we don't actually announce a lot of our investments because the business units are like, why would we want our competition to know? So it's a kind of constant tussle. Mojo Vision, I think, is going to be an incredible company, but they haven't even announced what they're doing yet. So I would say look at who we've partnered with, and you can kind of see where we're going, but we're really focused on the commercial side of the VR business.
And you did invest in the VR fund, I guess?
Oh,
Right.
yes.
Yeah.
The VR fund is amazing. Where's Tipatat? He's not here.
Yeah, so our most excitement investment recently is we are very, very interested in any virtual avatar or virtual influencer related investment. So like VR chat or like the web VR, this kind of the VR investment, we are very exciting about the new wave of the entertainment.
Mm-hmm. But what did some of your earlier funds invest in already, which are turning out good for you?
So you mean the good investment?
Like the previous fund, like your previous fund already invested a lot of
Yeah.
VR companies already, right? Were there some that were more memorable for you? I guess.
So most of very excitement investment actually VR chat from our previous fund.
Okay. All So what, I guess we're kind of in the whole gap of disappointment or trough of something, right? Disillusionment. Okay, yeah. And so one question is like, how is today different from 2014 or 2016? And, what expectations should the startups have when dealing with VR investors now?
I'd like to say I've gotten smarter, but I haven't. So I just maybe ask tougher, more pointed questions and really getting down to the business unit economics in terms of really understanding like how is this going to play out. And I was, a VP of biz dev at a startup, and I know the financial model you're making up is just assumption and it could change tomorrow. But I still, before I write that check, I'm going to go through it line by line and understand like what's the rationale for this. An example I always use is, you want to sell to doctors at hospitals in the U.S. Great. How many hospitals are there in the United States? How many doctors are at each hospital? Just like you've got to be able to answer those like fifth order question, because once they give you the money, it's like you're kind of in control of the day to day.
Why are you still investing in VR as well when you could be doing, esports or blockchain games or, other stuff?
I do the other stuff too. So corporate strategic, right? I need to make money and I need to generate strategic insights and optionality, right? Acquisitions and knowledge. VR, HP, has formed a VR business unit. There's now a VP in charge of VR and AR. So he's giving me like, here are the areas that I think are interesting, and I'm going out, and it just, from a strategic perspective, right? Fortune 100 company, you're an amazing technology company with some IP or something that I don't have, because we're not all working 80 hours a week, and I have a lot of other bureaucracy. So that's why I'm doing it, because that VP has doubled our share in gaming, and he's going to double our share in VR, and I can help him by doing that, by investing in 2 or 3 companies this year.
But the others here, yeah. Go ahead, Stephen.
Yeah, so for me, the big difference between 2016 and now is the tourists are gone. So if somebody's still investing in VR now, it's because they actually understand it and they're compelled by it, right? So when I look at whether it's entertainment, whether it's medical training, whether it's industrial design or architecture, anything where you have to think in 3D, it's more natural to do it in VR than it is with a keyboard and a mouse, flat out. So the people who are around that are still actively investing now, it's because they totally get it and they understand it. And what that means with the tourists gone is you don't have these absurd deals going on at crazy valuations. And a lot of startups think those crazy valuations were a great thing. They weren't, because the protections, the downside protections that get built into those mean you get washed out on the next round when you can't support the valuation your Series A came in at. So it's actually much healthier for the entrepreneurs too, when you're in this kind of environment where people can pay what is a fair valuation and that you can grow organically and add value and build it more naturally.
Big difference from 2016. So probably, as you may know, so like market growth is not as we expected, so relatively smaller than we expected, but generally we are very expected to the Oculus Quest. So that's I think a general understanding. But for me, so I'm very, some of our portfolio companies are very doing well despite this market growth. So again, so one of the portfolio company, VRChat or the Wave VR or other companies, they are very successful because of they are not only focused on the VR, they are generally focused on the virtual or avatar or new wave of the entertainment. In that case, so like a player can still play in the virtual reality, but the player or viewer can play in the PC or can see the YouTube. I'm very interested in this kind of the, say, maybe any cross-platform entertainment ways, so between PC and the virtual reality. Then, so once the VR market is going to be growing, so they are gradually moving to the VR or more this kind of the industry.
The other thing that's pretty obvious is that we're just in some second generation hardware perspectives, which is getting closer to a cost and a comfort that more of the masses will eventually will be more accessible to them.
Okay. And how do you look at location-based entertainment and VR arcades as well as investments within this larger VR space or AR space as well? It almost seemed like a lot of these sprung up as the pivot for a lot of the original VR companies. When the consumer VR didn't take off as well as expected, then people figured, oh, the arcades will take off though, right? So what do you think of this whole sort of space as well as just the pivot strategy, I guess?
I think it's been a way to get more people to try virtual reality that maybe couldn't before. Yesterday, we were talking a little bit more about different generations trying VR and having more fun with that. So I would expect it's enabled that as well.
I think one of the biggest aspects is people who are actually thinking they're in a VR business are going to fail. VR is a technology. It's like nobody was in a .com business. They were in a book selling business, they were in a travel business, they were in whatever. So if you understand the customer and what you can do for them and how that's genuinely helpful, that's great. VR becomes a tool towards doing that. Within the location-based VR, the most compelling ones I've seen give people a chance to rest their eyes from the headsets, right? So they've got board games, they've got food and beverage, they've got light shows, they've got other ways for people to socialize and interact. Again, it's just a technology. It enables amazing things, but that's not the end goal. It's just the way to solve the end problem.
I would completely echo what Steve was saying, right? It's just kind of grinding, non-sexy, like operations, learning what people want. Is it a pizza or is it a hamburger? And actually sweating that detail as much as you're sweating the details of, is the wireless headset working today or not, right? Because that's another kind of just operational challenge you have.
Basically, I'm also have the same. As I mentioned earlier, so like one of the portfolio companies who succeeded is basically doing the cross-platform. They are basically focused on the market from the beginning. Just VR is one of the use case. So this kind of the industry startups doing well. So if it's location-based makes sense, maybe gonna success. So, but I feel like any maybe people to a good use cases for LBEs, maybe esports or any AR. I'm very interested in these two sectors, but actually I didn't see it. These two categories.
Yeah. So, so do we have enough of the right technologies sort of arriving now, like say the Oculus Quest, in order to make some of these LBE, applications kind of more interesting, I guess? Or do you feel like this space still needs some work or needs some more technology?
I would say both. Oculus Quest is great for some types of experiences, like Modal's Ping, which is their play on Pong. It's a noticeably lower fidelity experience, but it's untethered, which is really cool. What is coming is going to be more kind of hybrid rendering that would enable that kind of a lighter, self-contained device to also receive streams from something rendered to be a richer, more immersive experience. And that's what people pay for, because again, at the end of the day, it's, for LBE, it's about, are you actually more entertaining than laser tag or bowling or ice skating or any of the 100 other options people have in a large city?
You've got to look at your OpEx, right? We're asking end customers to pay $1 a minute, 75 cents, 85 cents a minute. So either you're going to have to take down your cost, which is super hard because it's labor, it's rent. The hardware is nice, so it's getting better. Or you've got to go back to okay, what else can I sell to this person while they're here hanging out? Let them play a board game, let them have some ice cream, let them have a drink, just something else along those lines.
So how do VR companies get your money?
Yeah, especially for our funds, so we are so very entertainment focused fund, and we are very very excited about any virtual existence. People now are moving more and more from the physical world to the virtual world. People try to say John Michela, not John. What's Michela? No. One of the very famous Instagrammer, Michela, right? Yeah, Mikera. So I'm very, interested in this kind of. Mikera is not actual human being, so like they are the virtual beings.
So like the category some people are calling digital humans or virtual
yeah,
beings.
something like that. That can be exist in VR as well, but not only tied to the VR industry. So I'm very particularly interested in what's the new entertainment for virtual. I'm very interested in that one.
Yeah, I think there's going to be like a virtual beings conference in the summer as well, right? It's probably the first one. I don't know. But, does anybody have questions? I can go on, but if you have more burning questions, feel free to ask them. Good. Sure.
So question for us is timing. We've had a lot of traction. We have a VR. Probably break even this year, but then potentially. What advice would you have on, better off going while the iron's hot or waiting until people get.
So as an outsider, it's like, have you really de-risked it, right? So do you have 9 months of profitability? Are you profitable in all of your stores? Is there some spike that kind of, just, at the end of the day, I'm a fuddy-duddy banker, right? And I'm looking for reasons to say, yeah, I want to say yes, but I'm looking for all these reasons to say no, right? So I just want to kind of keep pressure testing it. So if you're only in one location, and you've only been profitable for 4 months, it's just like it's harder to get around it and say, oh, okay, I see this. So if you can wait 6 or 9 months and have 2 more locations, and it's just like, look, I've done this urban, I've done this rural, I've done this with with this hardware and that hardware, I've done this in different areas, and I've had all this turnover of people, and now look, in the last 18 months, I've been in this small, medium town, and 25% of my customers are coming back.
With software, you can scale. Sorry. With software, we could scale. We have some pretty good software for India on animal dissection because they can't do real animal dissection there. So that's the issue that we're sort of looking at, is whether we wait or whether we start pursuing it sooner rather than later.
Hard to answer one off, right? If you just gotta look at the details. Sorry.
Traction's always helpful.
There was another question somewhere else. Oh, just wherever.
Yeah, hey there. Phil Martin from Zero Latency. We already know how to operate sites fairly successfully. We're now up to 30. The reason I'm interested in asking is all of us in the industry saw a massive alleged investment in a free roam VR provider recently. What I really want to know is, where do you see the amount of money you're looking to invest in some of the businesses right now? Whether things have been overvalued or undervalued is always a question for the market to decide, but where do you think the right valuation for you to invest? What threshold? Excuse me for that back. Anyway, so how much do you think you would be investing in the companies you're looking at now?
So, for me, the amount of the amount of the investment was always tied to what does the company need, what are they trying to do. Like, particularly at Intel Capital, there's the luxury of being truly stage agnostic. And so the question is, again, goes back to, what are you trying to do? Why does the world need you to do that? And maybe most importantly, why are you the team to do that? But if you can answer those questions, the stage becomes more of a valuation discussion.
And I'm not sure if you said this, but what are you going to do with the money, right? Like, that matters.
So, just to add one thing to what Amy was saying, I think what's implied there is, to her earlier comment about traction, you've got 30 locations, you've got proof cases in different types of locations. So if you're saying we now need a big bucket of money to go replicate what we've already proven works as a model, or now we've got 30 locations up, we can really franchise this at scale. You know, that's a much easier story for an investment. You know, basically it's more digestible for an investor than, well, we don't know if this is going to work, but we think it would be cool. How about a bunch of money to let us try and see if it works?
So, and if I missed this in the beginning, but how did Sandbox raise $68 million from Andreessen? What does that mean to you guys? And what is everybody in here, what should they be learning from that?
I do not have an answer to that question.
I'll politely not answer it. Like, they're zigging and everyone else is zagging. Like, yeah, I looked at them 6 months ago and I didn't see it, and they see it, and they're more successful investors than I am, and you know, we'll wait in a couple years and see what happens. I mean, most of the other prior big LBE checks have been coming from strategics, right? MGM, AMC, blah, blah, blah. So I don't know.
More questions?
Hi, I'm Lynn Rosenthal. I'm the founder and CEO of Periscape VR, and I'm wondering why, if there are funds that are supporting female founders outside of AI and spatial computing that get behind platforms such as ours.
Are there funds that fund females outside of
Founders, yes.
outside of spatial computing
And
and AI?
AI. Mm-hmm.
Absolutely. Female Founders Fund, you know, Cowboy. There are definitely, just Google it for sure. There are female funders funding female founders.
But
that 3 times.
there's also credible VCs should be agnostic as to the gender of the founders, right? They should be looking at, do you know this business? Are you the right people to execute this plan? And is it a plan worth executing?
They should be,
Should
but
be,
we
but there's
received 2.2% of the funding last year.
Oh, I'm not arguing that that's a huge problem in the industry. This industry is famous for its blind spots. But also to your list, I would add, and I guess it's not self-serving because I'm not there anymore, Intel Capital has a diversity fund specifically for women and underrepresented minorities. And it's not that that fund is held to any lesser standard. I mean, that would be insulting. It's just to let people know that there's actually...
Yeah, and that started at $125 million, right?
Yeah. And so if you want an introduction, happy to make the introductions there.
Sorry, other questions, anybody? Feel free. We're just tapping their expertise. Oh, wrap it up? Okay, all right. Last question. Anybody got one? Quick? No? All right, we're wrapping up. Oh, all right.
So is HP generally investing in companies that are obviously helping the business model, or do you look outside of companies that are just supporting hardware sales?
We're very much a corporate strategic, so if you have the best drone company, I'm not going to invest in it. So some of the investments are very close in, and they're like, clear line what HP is doing today. Some of the investments are like, you kind of squint your eyes and say, HP could be in that space in a couple of years or then some, right? So anything around the next compute paradigm in AR, VR, XR, clearly someplace we're going to be looking at, and there's not going to be any kind of commercial tie to that.
All right, thanks to our panel. Thanks, everybody, for listening.